I'm Anthony Smith, and you're watching the Chart of the Week. Hello, and welcome to our weekly video. Unfortunately, the conflict in Ukraine is not looking any better than it did last week when we highlighted the significant decline in Russian stock prices and your likely direct exposure to Russian company stocks. This week, I wanted to make a few comments about Russia's currency, the ruble. It's been falling pretty significantly in the wake of Russia's invasion of Ukraine, and that is the chart that you're looking at here. This is a one-year look back, and it shows how many dollars a ruble can buy, or I guess in this case, cents. So a ruble could buy 1.3 cents before the invasion, and now it can only buy about 1 cent. It doesn't really sound all that spectacular when I put it like that, but that's a 25% fall in the currency in just a couple weeks. That's a big deal. So rapid currency declines are nothing new, and there is a playbook, if you will, of ways to defend a currency. And we won't go over all the ways in which a country or central bank can defend its currency, but we will highlight a few. One is to use foreign currency reserves or money, in this case, that Russia holds outside of rubles and other currencies to effectively support its currency by buying rubles with those currencies in that foreign reserve stockpile. And Russia does have a pretty sizable foreign currency reserve, and it can do just this, but Western financial institutions have banded together to effectively freeze much of Russia's foreign currency reserve. So this option is really off the table. Another well-known option and a way to defend a currency is to raise the overnight rate. And I'm sure you've heard a lot about how our Federal Reserve here in the U.S. is expected to soon begin a rate hike cycle. And we're talking 1/4 to 1/2 percentage point increase on March 16th. In fact, the expectations have been dialed back all the way to 1/4 because of the uncertainty that this conflict has led to. 1/4 to 1/2 percentage point. All right, let's get back to Russia. So Russia's overnight rate was at 9.5% before this all went down. It increased its overnight rate more than 10 percentage points to 20% on Monday of this week. And that is the chart you're looking at right here. This is a remarkable move. So how does this defend a currency? How does it protect the currency's value? So high interest rates, all else equal, are attractive to foreign investors looking for yield. So they'll buy the higher yielding currency to gain access to those higher interest rates, which, of course, would support the value of that currency. That's what the book says anyways. Personally, Russia's overnight rate would have to be meaningfully higher than 20% to get me, for example, to buy rubles. So the reality, though, is it may not have that desired impact of having foreign capital flooding into the market. It does have sort of a soothing impact on Russian citizens who have deposits in banks. So last week we saw the photos, and maybe earlier this week we saw the photos of Russians lining up at ATMs to withdraw money. So yeah, this rate move is serving to moderate or curb the collapse of the currency for now. But it's a rate move that is not without costs, significant costs. So higher rates are onerous for businesses, borrowers. So that could lead to bankruptcies which could lead to a surge in non-performing loans, which would place an enormous amount of stress on the banking system. A third option that Russia has employed is, and it falls under the category of capital controls. And among other things, Russia has required that exporters selling goods abroad convert 80% of revenues back into rubles. All right. So stepping back a little bit here, what does the rapid decline of the ruble mean for Russian citizens? How will the near to intermediate term look for life in Russia? And I got to tell you, I see a deep recession, I see bankruptcies, and I see high inflation. It's not pretty. And it's really hard to imagine that the population at large is going to believe that the invasion of Ukraine was worth it in the end. That's all for this week. Thank you for watching. We'll see you next week.